investment options. We have with us a broad spectrum of Greek, Cypriot, and international experts who will lend us their insight. Let me first introduce Mr. Rakis Kelepeshis, Chairman of Top Genesis Travel PLC, and Mr. Christodoulos Angastiniotis, Chairman of the Cyprus Chamber of Commerce and Industry, who have a few welcoming words for us. Mr. Kelepeshis, the floor is yours.
Thank you, Elena. Good afternoon, ladies and gentlemen, dear friends. On behalf of Top Genesis, I'm happy to welcome you to the third Money Conference 2020, which due to the pandemic of COVID-19 will run virtually. I would like to thank my associates here at Top Genesis and our co-organizers, the Cyprus Chamber of Commerce and Industry and the Cyprus Russian Business Association. Special thanks to our platinum sponsor, Eurobank Cyprus, for their continued and invaluable contribution and support for the third year in a row. I would like to extend a warm thank you to our high caliber speakers who will share their knowledge and expertise on the subject. Thank you for your time and contribution. Hopefully, we will have the chance to meet in person at the 2021 conference. I take this opportunity to wish you all a Merry Christmas and a Happy New Year. Stay safe and thank you for joining us.
Thank you, Mr. Kelepeshis. The floor is to Mr. Angastiniotis now.
Chair Lady Elena Danou, distinguished speakers and participants. Let me, on the onset, congratulate the Cyprus Russian Business Association and Top Genesis for so harmoniously cooperating to present today Money Conference, which follows the successful ones of 2018 and 2019. Of course, my special thanks go to Eurobank for again sponsoring this event under these most unfavorable conditions due to the pandemic. The title of today's seminar shows also the vision of the two organizers: investment discipline in a disruptive environment. I personally think that the title says everything about today's economic climate. Therefore, I do not need to expand on this, as the distinguished speakers will do so. I will focus more on the very near future, when the environment will be free of the pandemic, i.e. 2021 and forward. This is my real concern for the investment opportunities, as most of us know them, they have leased out. The tourist industry will take time to recover. The passport scheme is over, and the offshore business is almost static. So how do we attract investments in Cyprus? We have to think outside the box. And that is what we did in the first Money Conference. We introduced and planted the seed, if you like, two novel ideas, art and diamonds, on an international level as investment opportunities. By that, I mean that if Cyprus can persuade international art auction companies such as Sotheby's and Christie's of London to open a base in Cyprus for the rich Middle East customers, or persuade some of our very good Israeli friends, who, as everybody knows, they are world leaders in diamond trade, to set up some base in Cyprus. Imagine how much money will flow into Cyprus, in the Cyprus economy, and how many new labor positions will be created. I would like to point out that between 2018 and 2019, i.e. now, the international art market has seen an investment return close to 20%. And this is an amazing figure under today's circumstances. As president of the Cyprus Chamber of Commerce and Industry, I will encourage everybody from the accounting firms, advocates to investment companies to start thinking outside the box. I try to attract international companies to set up either base or a branch to a small, beautiful, but still dynamic island. As the president of the Chamber of Commerce, I will do everything in my power to assist towards attracting investments to our into Cyprus. Concluding, I would like once more to express my sincerest thanks to Cyprus Russian Business Association, Top Genesis for organizing for the third year in a row this most interesting seminar. I thank you all for attending this event. I wish you health for the festive season and please stay safe. Thank you.
Chairman, thanking you for your introductory words. Dear delegates, the main theme of our discussion to follow has two main components: discipline and disruption, both of which will require deconstruction and the mechanisms in place to reassemble the new order of things. The famous economist Joseph Schumpeter called the process creative destruction. Speaking of creative destruction, what are today the components that make up the global investment environment and the geopolitical landscape requiring discipline? COVID-19 is changing the way we conduct business, from telecommuting to telemedicine, to e-learning, to digitalization and e-commerce. Life in the cities is changing as telework replaces office meetings. E-commerce is changing buying patterns. Both will have significant implications for commercial real estate. The permanent changes that COVID-19 is bringing may increase structural unemployment, which in turn may demand higher budget deficits. Pension plans include a number of unfunded liabilities. Countries around the globe are running record budget deficits. In the next 2-3 years, several countries may be discovering that their annual deficits have created unsustainable debts. We live in an era of zero and negative interest rate policy. Scientists are warning us that we have just a few years to prevent environmental catastrophes. Renewable energy will be dominant by 2030, and electric vehicles will replace the conventional cars in the streets. Because of the above, oil will stop being the powerful tool that it was and still is. That in turn will have major consequences for oil-producing countries. Digital payments paved the way for digital currencies. The forthcoming war between central banks, digital currencies, and cryptocurrencies may create an upheaval in currency markets. The return of great power rivalry, especially between the US and China, will change the way statecraft is conducted. In light of the new global dynamics, we are honored to have with us Mr. Christos Elafros, who will present to us the global economic and investment outlook. A few words about Mr. Elafros. Following his studies in engineering, then he moved on to investment management, studied at the University of London, City University, and Cass Business School. He started his professional career in the 90s in the UK as an investment professional, investment risk researcher and visiting lecturer at Cass Business School. Mr. Elafros is a general manager at Eurobank Asset Management, MFMC, the head of the Global Investment Advisory Division, and the Global Chief Investment Officer of Eurobank. Prior to Mr. Elafros' presentation, we will view an informative short video by Eurobank Asset Management.
Κερδίζουμε τα προστοζήν από αυτά που παίρνουμε. Κερδίζουμε τη ζωή από αυτά που δίνουμε. Αυτό το απόφθεγμα του Winston Churchill θα μπορούσε να συνοψίζει την έννοια της βιωσιμότητας και της βιώσιμης ανάπτυξης και οικονομίας. Γιατί η βιώσιμη ανάπτυξη δεν είναι απλά μία διεθνώς διαδεδομένη τάση. Είναι ο τρόπος με τον οποίο θα αναπτύσσονται οι οικονομίες στο μέλλον. Μία φιλοσοφία που επηρεάζει και την επενδυτική διαδικασία και θέτει συγκεκριμένα κριτήρια για υπεύθυνες επενδύσεις. Τα αρχικά ESG αντιστοιχούν στα 3 γενικά κριτήρια βιωσιμότητας, τα οποία λαμβάνουμε υπόψη στη διαδικασία λήψης υπεύθυνων επενδυτικών αποφάσεων. Το περιβάλλον και την επίδραση στην οικονομική δραστηριότητα θεμάτων, όπως η κλιματική αλλαγή και η έλλειψη νερού. Τη στάση μιας επιχείρησης προς τους ανθρώπους της και την κοινωνία γενικότερα. Και τέλος, τη διαφάνεια και τη χρηστή εταιρική διακυβέρνηση. Στο πλαίσιο των ευρύτερων πρακτικών βιώσιμης ανάπτυξης που έχει υιοθετήσει ο όμιλος Eurobank, η Eurobank Asset Management AEDAC έγινε επίσημα η πρώτη εταιρεία διαχείρισης στην Ελλάδα που συνυπέγραψε τις αρχές για υπεύθυνες επενδύσεις PRI, μία πρωτοβουλία επενδυτών σε συνεργασία με τον ΟΗΕ για την προώθηση των κριτηρίων ESG και την επίτευξη των στόχων βιώσιμης ανάπτυξης που έχουν θέσει τα κράτη-μέλη του ΟΗΕ. Έτσι, επενδύουμε σε αξίες που συνάδουν με τις δικές σας. Αξιοποιούμε επενδυτικές ευκαιρίες με γνώμονα τα κριτήρια ESG, ενώ παράλληλα συμβάλλουμε όλοι μαζί στη βιώσιμη ανάπτυξη και την ευαισθητοποίηση σχετικά με τους βασικούς τομείς που την επηρεάζουν. Δημιουργούμε προϊόντα για τη νέα εποχή των επενδύσεων που συνδυάζουν την επένδυση με το θετικό αντίκτυπο στην κοινωνία και το περιβάλλον. Γνωρίστε την επενδυτική μας φιλοσοφία ESG και συνδυάστε τις επενδύσεις του σήμερα με το βλέμμα στη βιωσιμότητα και την ευημερία του αύριο.
Mr. Lafros, the floor is yours.
Thank you, Mrs. Chairman. Good afternoon, ladies and gentlemen. I would like to thank the organizers for the invitation in the Money Conference of 2020. But most of all, I would like to thank you for joining us today in a rather difficult setup from your screens. The topic of my presentation today will be the economic and investment outlook for 2021, but late last night I decided to change the topic and to discuss about the new normal. This idea was introduced by Bill Gross in 2009. And so after 11 years of evolution of this framework, the new normal will look like this. Mrs. Chairman, can you see the presentation? Yes, okay, so the new normal will look like this. This is the new normal for many of us. For me in particular, I've been working from home for the last 8 weeks. Together with my lovely wife and my lovely 2 daughters, and I will leave it to that because this presentation is recorded. But seriously, now we will have to start with a quick recap of 2020. So 2020 was described by the Time magazine as the worst year ever. And this is true. It has been a terrible year in every aspect of human life, socially, economically, and of course, with many tragic losses of lives. Staying from an economic point of view, the health crisis and the great lockdown resulted in a synchronized global recession, one of the worst in history, in the first half of the year. And this was followed by a rebound in the second half. What we saw, thankfully, was unprecedented central bank and fiscal intervention, which was in the area of $20 trillion combined. And this intervention has helped the economies to carry, and the markets, of course, to carry through the worst of the COVID-19 crisis. What we saw was that this policy intervention has, and actually what we've seen in terms of market performance, which is very decent and very positive since the start of the year, we saw a big divergence between the financial markets and the real economy. And to be honest, as a person that follows the markets for almost 30 years, I would say that the actual market performance was very surprising for us, but also very welcoming. Now, looking forward to the main economic theme for 2021, and assuming a successful vaccine rollout, which is a big assumption, but we have many indicators that things will work out better than expected in terms of vaccination. The first test will be this week in the UK, we expect to return to more normal economic conditions. Global economy should reach 2019 levels within the second half of 21, and we expect to return at the trend growth by 2023. I will share with you now a study from OECD. I don't know if it is easy to see, but this is from their economic outlook of December 2020, and you can see on the right-hand side that the trajectory of the global economy since their last review. As mentioned, we returned to 2019 levels at some point in 2021, and we will converge with the trend growth at some time in 2023. Global GDP growth for 2020 will be one of the worst, as I mentioned, in the area of -4%, but we expect a significant rebound for 2021 and 2022. Now, despite the fact that we are not returning to the 2019 trend growth anytime soon, we believe that the markets will care more about the rate of change than the absolute level. Having said that, in 2021, we expect that the performance of the economy and the performance of the fundamentals from the companies, earnings growth and so forth, will have to converge with the markets. So we expect a convergence between the real economy and the financial markets performance. This will happen gradually, of course, and it is subject to certain conditions to be met. The most important being the rollout of the vaccine. Due to the policy intervention, as I mentioned, the markets have priced at perfection, so they will be very keen to see fundamentals follow through. What we are looking in terms of the economy for signs of weakness and maybe giving us indications about the permanent damage done to the economies due to COVID-19 is, of course, the labor market recovery, both in the US and in Europe. Capital investment recovery, which is at this point looks a little bit weak. The majority of companies borrowed very big amounts of lending in order to protect their liquidity positions. Some of that will have to return, be paid back. So capital investment will be closed very closely. And of course, we will look for signs for inflation. Having said that, and as I mentioned, since 2009, when the new normal began and quantitative easing was introduced by central banks, all of us, every year, we worry about the exit strategies from the central banks. And this has been a constant worry. Something to remember is that before COVID-19, the global economy had very significant structural problems entering 2020. These are namely the very high level of debt, negative and very low yields, and the very low structural growth in developed economies, which is what Bill Gross said is the new normal. Following the pandemic, the situation has worsened significantly in all fronts. But something that is very important to note here is that we believe that 2021 will not be the year to worry for the exit strategies and the structural programs, as funding and financial conditions remain extremely accommodative. And the economy, of course, is recovering, and human beings are, when they see things recover and grow, from their nature are tend to be positive and hopeful. So structural problems of the global economy will have to wait for later. 2021 will be a transitional year where we will enjoy the recovery under the protection of the authorities. Nevertheless, long-term implications will have to be addressed now when we construct portfolios, and this is a topic that we will discuss later in my presentation. So moving on to and recapping what I said, we believe that 2021 will be the year of the vaccine. 2021 will be the year of reopening of the economy. And of course, it will be a year of recovery. For equities, it will be the year of rotations. And we see three big rotations themes emerging during the year. In very simple terms, we expect companies and countries and sectors that have suffered the most during the pandemic that will be the biggest beneficiaries of the vaccine. So, and of course, we see investors moving out of the winners, the COVID winners, moving gradually to the COVID losers. This is the big rotation theme one. It's very obvious what has outperformed during 2020, which was online retail, air freight, and logistics, big tech companies, countries that were heavily oriented to manufacturing. Most likely, we will see investors moving out of these sectors into airlines, hotels, cruise lines, leisure providers, energy, brick and mortar retail, finance, educational services, and most importantly for Cyprus and Greece, we will see investors moving into countries with a high weight to services like tourism in particular. So I think it will be a good year for Cyprus. I think it will be a good year for Greece. I expect that during the summer periods, many of our worries regarding COVID will be addressed through massive vaccination in Europe, but also worldwide. Of course, this is not a one-way street. You have to follow some drivers regarding the speed and the acceptance of the vaccine. And also, we will not return to the prior conditions in certain sectors. For example, the energy sector, an improvement in the economic outlook will clearly help oil prices to recover, and the demand will normalize, and energy stocks will benefit, but you have to take into account that there are structural changes in the sector, and the planet is trying to reduce the dependence on fossil fuel towards renewables. So it will require very special stock selection and picking when you try to move from one sector to another. The big rotation theme number 2, which overlaps a little bit with big rotation theme number 1, is of course something we call from growth to value, and something also which will follow is moving out from defensive stocks to cyclicals. And something extremely important to also that we expect is that we will see a shift from passive investment to active, we think, for a couple of reasons. The one is that by definition, rotating to sector needs investment professional doing the job. It's not something that physical persons can do on their own or without a special advisor. And the second and most important reason is that there is a big concentration risk on the rise, with mega growth companies representing more than 32% of the S&P 500 index. So in order to avoid the concentration risk, you should be more active. The move from growth to value also is based on valuation. The valuation premium between global growth companies and the value companies is the highest at the highest level since the dot-com boom. And we feel that we pay a significant price for growth stocks. And following leading indicators, we see increased nervousness from investors in this area. Something that also will influence the pace and the magnitude of the rotation will be the steepness of the yield curve and the absolute level of interest rates. Of course, higher interest rates means more attractive value companies and vice versa. Finally, something again that I would like to mention regarding passive investment is that 8 out of 10 global companies are in big tech, and the 10 largest global companies in the world represent the 65% of the next 19 companies. So something that we look at is, and we try to avoid these concentration risks that I mentioned, and this can only be done through active management. Finally, and I would not like to spend much time on this because other speakers will address this issue. There is a big rotation theme happening, which is not only for 2021, but is for the whole decade, and it is called moving from companies that focus on profit maximization to companies that do ESG investing. And this will be one of the main themes for the next decade. It will mark, they will try to meet the UN Sustainable Development Goals set for 2030. And it is a big trend that it's capturing a lot of investor attention. There are estimates that almost 20 trillion of US dollar will go to ESG investing in the next decades. And of course, this has implications to certain sectors which are vulnerable, like oil and mining, transport, financials, of course, resources. We will have to move from fossil fuels to clean energy. And of course, a lot of companies and economies, we will have to address the problem of stranded assets, especially in the oil and gas sector. So rotation is the name of the game for the equity asset class. Moving on now to the fixed income space. I think the title says it all, a lower for longer or lower forever. During the 2020 pandemic, companies and governments have been forced to borrow trillions of dollars to cover revenue shortfalls and protect their liquidity reserves. Following that, global debt will hit an all-time high, which is close to $277 trillion, or 365% of global GDP. Normally, when you borrow, interest rates go up. This is the physical equation. Nevertheless, as I mentioned, central banks were there intervening very fast in a very big way. So interest rate, instead of going up, moved lower. We expect that the central banks will continue to support the debt market in every way possible. We don't expect any significant move from at least for 2021 and beyond from the big four central banks. There are some thoughts, and in a way, in an indirect way, debt immunization is happening. There are structural inflation challenges in Europe and Japan, and negative interest rates. So we expect there that the ongoing QE will continue for the foreseeable future. On the other hand, the Fed, the Central Bank of the US, introduced a new average inflation target, which implies that allow them to overshoot the target, because the new target is calculated on average. And this means and implies that monetary policy will stay very accommodative for quite some time. So the debt market is protected, thankfully, from very strong central banks. Now, the main threat and something to look in these asset classes, of course, inflation. Inflation expectations have picked up lately, but still are very low. The next big thing that markets will focus is when central banks will start to taper. But we think that this will not be not before 2022. Nevertheless, inflation is something that we continue to watch. QE, quantitative easing, was extended to credit as well, and this has helped a lot the recovery of the asset class. Credit had a very strong year in 2020, and now looks fully priced. There is an ongoing battle between liquidity and solvency, which will continue in 2021. Defaults were on the rise, but much better than expected. We have a neutral stance for the credit asset class, and we tend to avoid the idiosyncratic risk. We prefer collective investments, diversifying as much as possible. And our top pick for the first half of the year is EM investment grade. Now, I will close my presentation with a few remarks about portfolio construction. Looking ahead in the next decade and trying to calculate the expected returns relative to the expected risk, we have to reset the way we were thinking the last 10 years when the new normal was introduced. We have to take into account, especially in Cyprus, but in Greece also, and of course in Europe, that cash yields zero or negative in many cases. There is negative yielding debt close to record levels, which means that physical persons cannot take advantage of that because they have a negative real returns. Of course, another issue that is arising is that the very low yield from the big four economies is not only a problem about expected returns, but also impact the effect of diversification within portfolios. Typically, when equity is correct, safe havens go up. But in order to counter the risk, you have to have some sort of space above zero. Being close to zero, it means that the ability to diversify is reduced. And then the last thing about the asset class is that we have seen during 2020 that bond volatility relative to stock has increased, and this is another reason why bonds are becoming less diversifying than in the past. So in order to conclude, and this is a very big topic, and maybe we can discuss in the panel, is that going forward, the optimal allocation will move from government bonds. In our view, it will be substituted by high quality investment grade. This is what our models are showing. And the other thing to address in portfolio construction is the introduction of alternative asset class. And we at this stage we propose absolute return funds, gold, real estates, and also we prefer to substitute high yield risks, high yield bonds to equities, and try to rotate as much as possible from yield to income. So I would like to thank you for your attention, Madam Speaker. Thank you very much.
Mr. Elafros, we thank you for this enlightening journey regarding the discipline the investors will require to exhibit post-COVID time. It was really, really outstanding. Thank you very much. We will now continue with our panel discussion. Therefore, I would like to introduce our team of panelists moderated by Panagiotis Chrysostomou. Our moderator, Mr. Panagiotis Chrysostomou, is currently head institutional clients at Eurobank Cyprus Limited, where his primary duties include servicing the bank's institutional clients for their investment and banking needs. He holds a BA honors in accounting and finance from Lancaster University and an MBA from the University of Illinois, where he studied with a Fulbright scholarship. He's a chief financial analyst, charter holder, and a founding member of the CFA Society of Cyprus, where he served as president. He's also a member of the Cyprus Investment Funds Association, CIFA. We move to Mr. Theophanis Mylonas, who is the chairman of the board of directors and chief executive officer of Eurobank Asset Management. He's also the president of the Hellenic Fund and Asset Management Association. In the past, he had various managerial positions within global markets. Mr. Mylonas holds an MSc in finance from the University of Strathclyde and a high honors BSc in business studies from the University of Buckingham. We move to Mr. Marios Hadjikyriacos, who worked in various senior treasury positions in Cyprus and abroad. He was involved in the fields of balance sheet management, wholesale funding, derivatives trading, product structuring, and sales. He joined Eurobank Cyprus in 2007 in the position of head of global markets, where he was responsible for managing liquidity and investments, as well as for advising clients on risk hedging solutions and investment strategies. Since 2020, he has been heading the wealth management division of the bank. Mr. Hadjikyriacos holds a BSc in economics and finance from Baruch College and an MBA from the University of Cyprus. Now, Mr. Eugenios Antoniou, who is a results-oriented investment professional with broad experience in single and multi-family office services. He started his career with PwC UK in the market risk and derivative valuations team, and he continued with Morgan Stanley in London. He's now the chief information officer of a single family office which operates from Cyprus. Eugenios is a chartered financial analyst, charter holder, and a qualified risk valuation chartered surveyor. He obtained a BSc in economics and mathematics from Bristol University and MSc in mathematical trading and finance from Cass University Business School. Mr. Haris Pogiatris is the investment manager of CNP Cyprus Insurance Holdings since July 2017. He's responsible for the assets under management for the 3 insurance companies within the group, CNP Cypria Life, Asfalistiki, and Zois. Prior to that, he was part of the fixed income portfolio management team of Bank of Cyprus for 7 years. Mr. Pogiatris graduated with a BBA from Baruch College, City University of New York, majoring in finance and investments, while later he got an MSc in finance and banking from Cyprus International Institute of Management. So the floor is yours to all gentlemen.
Thank you very much, Mrs. Stanou. Good afternoon, everybody, and thank you for joining us this afternoon for what we hope to be an interesting discussion on the current investment environment and the outlook for next year. Let me also thank Mr. Elafros for the very informative presentation. Elena has already introduced our panelists. Thank you, gentlemen, for accepting our invitation to participate in this discussion. managing investment portfolios in a disruptive environment is our theme. So let me start with Mr. Mylonas. Mr. Mylonas, as CEO of Eurobank Asset Management and President of the Hellenic Fund and Asset Management Association, you have daily contact with investors in Greece and the wider region. How are investors dealing with the current disruptive environment? How disciplined have they been? And what are their expectations?
Good afternoon. Thank you very much for the invitation. It's a pleasure to be here. Well, in order to answer, I would like to break down the two parts of the question and start by answering by describing the current disruptive, as you said, environment. Since on a global level, this year has been a year of contradictions, a year with big volatility and very different investor attitudes and responses. Positive attitude in the beginning of the year was followed by a sell-off and then staying away from investing for quite a long period. But if we want to look at this at a more local level, we have entered this crisis when things were looking quite positive. In comparison to previous crises, this crisis had a very big one unique characteristic, and that is the very low level of interest rates, and especially the deposit interest rates. In order for someone to save for future use, whether this is for getting a pension or for a specific project, there is no more any compounding effect if you leave your money in the bank. Thus, at the beginning of the year, we started seeing quite big inflows in mutual funds and more generally in most managed types of services and products. Unfortunately, the pandemic crisis reversed this trend for the larger part of the year. But during the last couple of months, things have changed and we have been experiencing significant inflows. It looks like this year could even be positive in terms of total assets under management. And at this point, maybe I should stress a bit the importance of financial literacy and financial knowledge, because this is a time now that past depositors are now becoming potential investors. And this is what we are seeing, this is what we are experiencing now. Greed and fear are typical to men and can very easily guide the decisions of non-professional investors. So it's quite important that investors should be able to invest according to the proper risk profile and the proper long-term targets and needs. So it is for what I have just mentioned that I believe that this market is about to grow exponentially during the next years. Investors are actively looking for opportunities, and it is very important for them to be responsible and follow specific criteria. Now, to briefly answer the second part of your question, since I believe my colleague, Mr. Elafros, has already answered some of the points, I just want to mention that during 2020, we have noticed a diversion between sectors that were affected by the coronavirus and the restrictive measures. Industries such as technology and biotech have been the main beneficiaries, and ESG has been a mega trend and it's here to stay. These conditions are normalizing, and as they are normalizing, we start experiencing a reversal of this trend. We have heard about value over growth becoming more important, and all these targets can have an ESG layer. Now, the central bank's government stance and the expectation of better condition does not indicate that we will have any more the portfolio protecting approach that we had during this year. And that means that we are very close, if not already started, to have the new normality. The new normality, from my point of view, is already here. That by itself pertains that the portfolio run higher risks. We have already seen all-time highs in a few global stock markets and indices, big reversal from recent lows to the Greek and Cypriot stock exchange. And we are also experiencing good appetite for corporate bond issues in all sectors. With a disclaimer that my colleague mentioned earlier on, that probably these things we could start discussing about some reversal of this trend and the withdrawal of support of central banks during the end probably of 2021. This is how we are seeing investors looking to enter the new year. So just in order to conclude, investors should remain positive, are positive and will remain positive. we should continue to invest on liquid investments, and we head towards a new normality. Thank you.
Thank you, Mr. Mylonas. Let me continue our discussion with Mr. Marios Chatzikyriacos, Manager of the Wealth Management Division of Eurobank Cyprus. Maria, central banks and governments alike have continued to play a central role in the current year with intensified interventions after the COVID outbreak. How do you see their role in 2021?
Good afternoon, ladies and gentlemen. Thank you, Panagiotis, for the question. Indeed, this is a very interesting topic. It contains a lot of elements that were explained briefly by Mr. Elafros just earlier. It's true that the central banks have done a lot to restore confidence to the market, to restore the liquidity conditions. On their part, the governments have engaged in a lot of fiscal measures to support medical resources, keep people employed, keep businesses going, especially SMEs and other organizations. And all in all, on the developed economies, the contribution from the fiscal front has been worth between 8 and 10% of GDP. Starting with the Fed has done quite a lot. They expanded the balance sheet by $3 trillion to $7.25 trillion through a number of measures, which include direct security purchases, government security purchases, expansion of repo operations, and generally all the actions that were needed to restore the liquidity conditions to the market. Furthermore, of course, as we know, they reduced interest rates aggressively by 1.5 percentage points to the range that they are today, between 0 and 0.25%. The Fed also, with the cooperation of the US Treasury, launched certain programs for direct and indirect lending to corporations, state and municipal governments. The ECB on their front, they also took equivalent measures worth 2.1 trillion euro up to today. They expanded the asset purchase program significantly by the amount of 120 billion euros until year end. But most importantly, they established the pandemic purchase programs, which are today worth 1.35 trillion euros. They also adjusted the terms of the targeted long-term refinancing in order to trigger lending from the banks, which today, in essence, they are paying banks to lend money to the economies, and not with a very aggressive target, but just to maintain the current level of credit in the markets. Also, they relaxed somehow the capital requirements to the banks, which released approximately 120 billion of capital to the system, which can be used to encourage lending. The trivial question, of course, is, have they done all they could, and what else can they do? The Fed has been clear, and I'm fully aligned with what Mr. Elafros explained. The economy, the Fed considers that the US economy is still in a damaged state, and despite the positive vaccine news, the recovery and the uncertainty remain. The Fed chief reiterated that they will use all the tools until the recovery is well underway, which means that the current liquidity conditions will be supported in the new year as well. On the ECB front, we have seen that we do expect an expansion to the pandemic program, which will take it to a total amount of 1.8 trillion, and also to take additional measures to encourage lending by adjusting further the TLTRO terms. All in all, I share the view that monetary policy will remain accommodative and within the known parameters that we witnessed within 2020. On the fiscal front, we're waiting to see the final plan of the new US administration. In Europe, we believe that the extent of the unilateral fiscal responses will be moderate, just because of the very high level of debt that the government have today. But on the other hand, we expect to see further collective actions. It could be through the full implementation of the SURE program, and eventually by the implementation of the next generation EU 750 billion fund that will gradually start contributing to economic growth. Thank you, Panayiotis.
Thank you, Maria. Let me continue with Haris Poyagis, investment manager at CNP Holding, CNP Cyprus. Harry, the fixed income markets have been enjoying the huge amounts of liquidity poured into the markets for quite a long time, as Marios has just described, and they are expected to continue into the new year. So after another great year for bonds, is it time to look elsewhere for returns, or are we going to see the same scenario playing out in 2021?
Thank you very much, Panayiotis. Thank you for the invitation as well. Just to say that, as Marios explained and Mr. Elafros earlier, since the monetary policy will remain accommodative, I believe that we might see more returns from in bonds in general, as probably the spreads will continue to converge between, let's say, more high yield credits to the risk-free, let's say, rate. For example, on the peripheral front, we could say that the spreads of, for example, Italy, Greece, Spain, and Portugal, they have some they have some space to move lower, as we see for example, Italy spread of Italy to risk-free Germany is around 120 basis points, and same with Greece, while Spain and Portugal is around 60 basis points. We could see this compressing further, as we see before the great financial crisis. The spreads of Italy to Germany was at 20 basis points, and Greece actually it was almost the same levels, and Spain and Portugal were at single digits, between 5 and 10 basis points. So I believe due to the monetary policy expansion that we'll see some compression further. While on your second part of the question, in regards to looking elsewhere for returns, we are indeed allocating more capital into alternative investments, and especially now on the infrastructure side, that we see potential increased returns coming from this asset class. But it's very important to understand that you cannot allocate a lot of capital in this alternative space, since the liquidity aspect is very important. I mean, there's a lockup periods in these type of funds, and you have to be aware of the important liquidity. Just to add that the active management aspect is very important in this disruptive environment, since on the fixed income side, you should try to time the market, maybe buying dips, or use some other strategies on new issues, that there are some extra pickup when a new issuer is coming in the market. So the being more active will pay off than me being more pathetic as in the past. Thank you very much.
Thank you, Harry. I'll continue with Evgenios Antoniou, who is Chief Investment Officer at a single family office. Evgeny, equities have proved quite resilient in this pandemic environment, and have also exhibited an unbelievably quick turnaround following their negative route in February and March. Will they continue to be the preferred asset class of many investors?
Thank you, Panayiotis. That's a great question. Actually, equities indeed behaved quite well in 2020. They have like a strong rebound from the lows of March 2020, mainly driven by the unexpected reaction of the governments through stimulus packages, as well as through central bank support. As we have all here today, and we know low interest rates are here to remain, at least for the foreseeable future. This makes equities quite attractive. For multi-asset portfolios, it seems that equities are more attractive than bonds. For example, if we compare the dividend yield that you get if you invest in MSCI World Index versus the yield that you get from a global bond benchmark index, you are getting 1.5% more if you invest in equities versus bonds. It's quite notable that if you go back in 2008 and you make the same comparison, bonds were yielding 2.5% more than equities. So only by this analysis, you can understand that equities, even at the current high valuations, they offer more yield than bonds. And you can understand that in a multi-asset portfolio, bonds may not be the diversifier that you expect to be. When it comes to equities, in 2021, I believe it would be the preferred asset class that investors in multi-asset portfolios should definitely have overweighted. However, having said that, the world is changing, and it's really important to be selective. You may find yourself like losing money, whereas the rest of the market, equity market, is increasing. So what I believe investors should focus on is number one, in geographies. If you take all these stimulus measures and the central bank response, you will realize that the most effective ones are in US and in selective Asia Pacific region, as well as in Germany. So in these regions should be of focus when you go into equities. Then investors should focus on rotations, as has been explained by Mr. Elafros earlier on. There is a rotation from value to, a rotation from growth to value, for example. Tech stocks are trading at overheated levels. So this could create volatility within 2021. So investors should be disciplined and focus on a buy on dip strategy, buying equities with solid fundamentals to build the right portfolio to achieve the long-term goals. Also, we have all here about ESG, which is one of the mega trends that investors should focus in. Also, other trends are 5G. So investors should focus in investing in equities that they will benefit from 5G, as well as from innovative healthcare. So although equities is the preferred asset class, if you invest passively, I don't believe that you will get the stellar returns of the previous years. So active management is quite important, and investors should definitely include equities that they follow the mega trends if they want to get stellar returns in the portfolios and compensate for the lower returns of cash and bonds that we see at the moment. Thank you.
Thank you, Evgeny. Let me briefly touch upon geopolitics because we have a time restriction as well, with a question to Mr. Elafros. Mr. Elafros, geopolitics have been particularly disruptive in the investment process during the last few years. We are still dealing with Brexit. We are in the 5th year of doing so. And I'm wondering whether we will be dealing with that in 2021 as well. And we will have a new US administration in January. So any views on how to incorporate such events in our investment decision-making?
Okay, this is always a very difficult question, and especially when you address these questions to people that live in Southeast Mediterranean. They are very used to geopolitics, and the situation continues to be tense. It's very difficult to trying to to predict what a major geopolitical event will do to your portfolio. For example, the Brexit that you mentioned, and I will not try to make any predictions because we are on the edge. So what I can say though is that I remember how scared we were when the referendum result came, and how fast markets adapt, and we enter, if you remember, a Goldilocks scenario following the referendum decision. And typically markets tend to overreact in geopolitical events, and typically as of course, having assessed the event is a good buying opportunity. I cannot foresee for 2021 a geopolitical event that can alter the global economic outlook. All in all, I believe we will go to a more smooth environment. I believe the new US administration, at least it will be much more civilized in their reactions against allies and probably against non-allies. I understand we will have a different environment. I believe that US and European relations will improve. And to be honest, at this stage, I cannot, I mean, apart from Brexit, that will most likely, to my understanding, the most probable scenario is to get another extension and not a no deal. I don't see something that can move the global economy away from the recovery. This is, I think, all in all, geopolitics most likely will smooth out. The main big tension between US and China, I don't think we will have a significant progress there, but I think only on the margin things will improve, both on the trade front and maybe on the tariff front. So I would say that at this stage, geopolitics are not very high on my list for 2021.
Okay. Thank God, because you know, we have had many of those in the last few years, so it's good that we get done with them. I'm not so sure though, to be honest, but let's see. I see a couple of questions from the audience, but before doing that, I would like to briefly touch upon alternative investments. So, Evgeny, very quickly, in just 1 minute, if you can, what's your view on alternatives? Do you have any particular preferences within that asset class?
Thank you, Vanayotis. Yes, alternative investments are definitely like an asset class that it's a must-have in all portfolios, especially in 2021. And I strongly recommend adapting an allocation to alternatives, or if you have already to increase alternatives. But as has already been mentioned, we should be really careful which alternatives we should choose. I think for 2021, specific categories of hedge funds are quite attractive. Gold could be, but my favorite alternative asset class is infrastructure private equity funds, especially those that offer an early exit. And the reasons are the following. Number one, this particular alternative asset class is a good diversifier in a multi-asset portfolio with negative correlation to equities. Number two, it's a great hedge against increased inflation. And number three could be a great substitute of fixed income under a low yield environment, since this asset class offers like a stable cash outflow stream.
Thank you, Evgeny. Let me switch to Harris. I mean, real estate is considered, it's probably considered one part of alternative investments. It can also be a standalone asset class, but in any case, Harry would like to hear your views on real estate, very briefly again, please.
Yes. Okay. Real estate, it's basically more traditional alternative investment, I would say, especially for I don't know, Cypriots, that they were always looking to increase real estate exposures. But I believe we should be very cautious on this asset class, since we might see, at least in general in the local space, I would say, a more flow on supply of real estate assets from the banking sector. So on the local front, I would be very, very cautious on this asset class, especially if we see more supply, as I expect. We might see more compressed rental yields as well, as we see, you know, more and more construction taking place on the ground.
Thank you, Harry. I see a few interesting questions coming from our audience. I will try to pick some of those, and I'm sorry for not being able to answer all of them, given the time restriction. First of all, I see a question referring to ESG investments, in fact, environmental, social governance, as we said at the beginning. So, do you have any specific suggestions on how to play the green agenda in our investment portfolios? Should we buy electric vehicle companies? Should we buy clean energy? Who can take that? Probably Evgenios, probably.
Yes, I can take that with pleasure. Actually, we all love this ESG theme, but you have to be really careful. So this is a very tricky part of investing, because we can see, for example, shares like Tesla that they trade at these levels at the moment that may not be supported by fundamental analysis. So what I recommend to investors is to find the right funds to invest in such a theme like electric vehicles or green energy. A tip I can give to them is smart green energy funds. It's something like a new category that it's expected to perform really well. But in general, they should make a deep due diligence together in tandem with their financial advisors before entering to any fund. Thank you.
Another question that I see here is from a participant who thanks us very much about the interesting views. Could you please kindly comment on what factors, incidents could affect the equity markets negatively? So what are the risk factors for equity markets? Christo, probably, can you touch upon that? Risk factors for equity markets?
Yes, this is a good question. Actually, the recovery from the lows was one of the best in history. And equity asset class, the main characteristic, as mentioned by all of the participants, is that they are on the high end of their valuation range. Some people say that might be expensive relative to history and relative to certain valuation metrics. So on an absolute level, this is true. But as it was mentioned, when you look at a relative level, relative to bonds and where are the core rates, equities still look relatively attractive. So my biggest risk for the equity asset class is a change in regime in core rates. So if, for example, we have a shift in inflation expectation, we see inflation coming through the economy, and this, especially in the expectation, and this moves a lot and rapidly the core rates. Either this will be mainly the US Treasury rate, the expensive part of the equity asset class, which is mainly the growth has tech stocks, may correct a lot. And given that they have a big membership in the index, might produce a drawdown. So I would say one of the biggest risks is a shift in the interest rate regime. We have seen something like that during February of January and February of 2019, if I remember correctly. This is the one, and the other is, of course, the fundamentals. As I mentioned, you know, the markets have performed so well, and there is a divergence between fundamentals and the economy. So, in order for equities to sustain and consolidate at this level or move higher, we will have to realize the expectation about earnings growth, which is quite high following the recovery, maybe in the area of 30%, but this has to come and has to be reaffirmed, and the economy and the vaccine to work as expected. There are other smaller, let's say, events that might cause a drawdown or a correction. For me, it's the upcoming election for the Senate in the US. Currently, we are 50 Republicans and 48 Democratic participants, and the upcoming election is for grabbing the 2 remaining seats. If this goes to the Democratic Party, there may be a shifting regime regarding fiscal package in the US or taxes and so forth, because this will effectively realize the blue wave scenario. So this is something that we are looking short term. The base scenario is that the seats will go to the Republicans, and the legislation capacity will be relatively limited.
Thank you, Christo. I will assume that we have 2 more minutes before wrapping up the panel discussion, and I see a great question here that I cannot resist from asking. So, have the markets at the current high levels already discounted the economic recovery expected for 2021 as a result of the visibility provided by the imminent global vaccination program? In plain English, have we missed the train already? I mean, I can take answers from 2, 3 of you. If we just answer yes or no, have we missed the train? Yes or no? Christo, would you like to start with that?
Okay, first of all, when you are investing, we avoid to either enter or exiting the markets. You have to have a portfolio approach. And in this environment with the negative deposit rates, you have to be invested. And I can produce thousands of research papers saying that if you try to time the market, most likely you will miss the train. So timing, if you look at timing the markets, there is no point of doing that. What you have to do is to have a diversified portfolio and adjust risk accordingly, according to a strategic allocation, which you have to revisit every couple of years, maybe every decade, to see how expected the returns are evolving. So, I mean, the best example I can give you is that following the pandemic correction, and Fanny's mentioned that, all investors were reluctant to enter the market. Understand the sentiment, you know, being locked down in your house and looking at the drawdowns. But at the end of the day, you will see that people that maintained their portfolios and did nothing did much better from investors that try to time the market and exit and enter and so forth. So the answer to your question is that you have to be invested and adjust the risk accordingly. And typically, if you are not invested, you should enter the market through the lower risk part of your portfolio and try to have like sort of regular installments, try to move the timing out of the equation.
Would anybody else would like to add something on that, or you like to wrap it up? Thank you, Christo. It was very comprehensive.
Panayiotis, just to mention.
Okay, go.
Sorry, just 3 words. Thank you.
Yes, thank you, Mr. Mylonas. Go ahead.
3 words. It's
Of course.
dispersion portfolios, long-term horizon, and always stay invested. I'm talking in the next 5 minutes. I'm talking in another conference, and these are the main topics on how we should keep calm and continue to ride any trend, not just this trend, any trend, whether upwards or downwards.
In other words, investors have to be disciplined, even in disruptive environments such as this one. And let me wrap it up with that. Thank you very much for listening to us, and thank you to all our panelists and to our organizers. Thank you. Thanks a lot.
Thank you.
Thank you.
Gentlemen, thank you very much for your amazing perspectives regarding investing in these disruptive times. I will stick with what Mr. Mylonas said, that there are investors actively seeking for opportunities. That's amazing, and that's the positive message which we appreciate a lot. And then it was mentioned, I think, by Mr. Antoniou, that we should really invest correctly and not passively. That's what is very, very important. There are so many experts like you, so here is Eurobank to go and invest with the experts, and then don't, be in uncharted waters, as we say these days. So thank you again for these excellent inputs and insights, and we'll carry on now with a different part, the second part, and we'll shift from the banking world to the economic strategy for Cyprus, currently being developed by the Cyprus Economy and Competitiveness Council, headed by ex-Minister of Finance, Mr. Takis Kliridis. A few words about Mr. Kliridis, who is a fellow of the Chartered Association of Certified Accountants and a member of the Institute of Certified Public Accountants of Cyprus. He was a senior partner of KPMG Cyprus until he was appointed Minister of Finance of the Republic of Cyprus in 1999, a post he held until 2003. During his ministerial term, he introduced a major tax reform in 2001 to harmonize Cyprus tax legislation with the EU, through which Cyprus managed to close the chapters on taxation, including shipping and competition. Since 2003, he's a non-executive director in publicly quoted and private companies in Cyprus and overseas, including participation in corporate governance committees, serving on the board of directors of companies listed on the London Stock Exchange, regulated by European Central Bank and regulated by Insurance Commissioner of Cyprus. His main interests are in banking, finance, insurance, and shipping. Since June 2018, he's the chairman of the Council of Economy and Competitiveness. Mr. Kliridis, the floor is yours.
Thank you, Madam Chairperson. Ladies and gentlemen, dear friends, I also like to thank and congratulate the organizers of this event, Top Kinesis Travel Public Limited and the Cyprus Chamber of Commerce and Industry, as well as the Cyprus-Russian Business Association, but a special mention also to the platinum sponsors of this event, Eurobank Cyprus. Despite the difficulties in organizing such events, the organizers, following the digital transformation of our society, organized the Money Conference 2020 with a very appropriate theme under the prevailing difficult economic conditions of investment discipline in a disruptive environment. The presentations and the panel discussions in the first part of the conference proved already the successful selection of this year's theme. My presentation today will deal, as Madam Chairperson said, with the new initiative undertaken by the Council of Economy and Competitiveness for the preparation of a strategic study for the new model of the Cyprus economy. This is a study undertaken by international and Cyprus consultants and is funded by the European Commission Structural Reform Support Office. The project is expected to provide the necessary strategic directions and conditions for targeted and effective implementation of reform and investment policies of the country for the next 10 to 15 years. The analysis of the weaknesses, the prospects of the Cypriot economy, as well as the global economic trends and risks will be taken into account. An important outcome of the project is expected to be the identification of key, existing, and new sectors that can be key drivers for achieving long-term sustainable economic growth based on the comparative and competitive advantages that Cyprus has or can realistically develop. The objective will be to strengthen the international competitiveness of the Cypriot economy, to improve its resilience to adverse internal and external factors, and to improve the potential for sustainable and long-term development. The new development model will lead the country to sustainable development, should be based on openness, attractive new investment, strong competitiveness, innovation, expansion and diversification of the productive base by promoting sectors and business activities with high added values. Particular emphasis should be placed on the long-term sustainability of development, both environmental and social. The new strategy of our country for the future should take seriously the commitments undertaken by Cyprus towards sustainable development objectives set by the United Nations for 2030. The new strategy will reflect our vision for the future, not just a theoretical paper to be locked in the drawers of government mandarins. It will be an achievable proposal accompanied by practical and feasible action plans. The project has already begun and is expected to be completed in the last quarter of 2021. The first deliverables, including the strategic directions of economic policy, are expected to be ready in early 2021. The Council's intention is to hold regular updating meetings of all stakeholders and interested parties for the progress of implementing the important project for the economy. Successful project implementation will rely heavily on cooperation and in consultation with all stakeholders that are likely to contribute substantially to shaping an ambitious but also realistic, solid, and widely acceptable model of growth for the economy. In saying this, I call all of you personally, who play an important role in the economic life of our country, to support the efforts of the Council and to contribute, where possible, to its successful completion. Successful not just for the Council or the current or next government that will be called upon to implement the recommendations of the project, but for the benefit of the present and the future economy and the Cypriot people in general. I have already mentioned the foundations of the new strategy to exploit business that can make Cyprus a better place to live, to work, and do business. This is our vision for 2035. A dream come true, perhaps. Some of you will say, come on, wake up. This is Cyprus, a common phrase lately in our vocabulary. But you can say the same phrase, yes, we can do it. This is Cyprus, and we, the Cypriots, have the ability to do it. We can be a thriving and resilient economy at the crossroads of Europe and the Middle East. Let me elaborate now what are the business opportunities that will be created or reinforced with the new strategy. The enablers of the Cyprus's Vision 2035 will be the digital transformation, green economy and environmental sustainability, effective government and governance business, friendly policy and regulation, social sustainability, innovation and research and development, and lastly, education reform. The new strategy will focus on will not focus on one or two sectors of the economy, but on a number of business activities that Cyprus has or can develop a relative advantage, taking into consideration the developments in the global economy in the next 10 to 15 years. Examples where the government should give emphasis is to improve the regulatory framework and the friendliness of the civil service, be transparent and fair marketplace for everyone, enhance an efficient legal system which resolves disputes fast, adheres to the rule of law, and combats corruption. What are the main sectors of the economy now that will lead the way and be the drivers of growth? Based on these drivers, the business community should start planning to expand their businesses towards these sectors or embark on new business, having in mind where the economy will be aiming to reach in the next 10 to 15 years. Let me list the sectors first and then expand on each one. The sectors will be agri-tech, ICT, information and communication technology, light manufacturing, professional services, solar energy, tertiary education, tourism, green economy, innovation, and research and development. Let me start with a few comments on agri-tech. We should encourage growth of circular economy for livestock farming, as well as growth of solar photovoltaic for farmers. Invest in centers of excellence for agri-tech, for better crop health, livestock management, as well as better water management. Specialize in products that Cyprus is in a better position to take advantage of due to its climatic conditions. The second sector is ICT, information and communication technology. We should encourage international ICT firms to establish in Cyprus or partner with local business. Targeted immigration to fill gaps in missing skills by providing high-skill visas. Encourage building science parks with tax breaks. On the digital transformation, new legislation is needed to improve e-commerce. We have seen already the growth of this sector as a result of the pandemic. E-commerce is with us and will continue growing in leaps and bounds. Opportunities are here for existing business selling products through additional channels, as well as for logistics providers. Light manufacturing. Taking into account the difficulties and inherent disadvantages, emphasis should be given on food processing, pharmaceuticals, and biotech. Emphasis on high-value goods by giving appropriate incentives to set up high-added value sectors in Cyprus. On professional services, we should attract digital nomads, freelancers, and remote workers. Focus on other professional services than what we have been providing in the last 40 years. For example, business services, treasury, compliance, risk management, digital enhancement will provide new roles for multi-geographical locations. Does it make any difference for a bank, for example, to have its compliance center in Nicosia to cover Limassol, London, or Athens? The next chapter is solar energy. We should grow with focus on high-tech manufacturing of renewable energy products. We should partner with other developed companies to manufacture solar and photovoltaic, both for Cyprus as well as overseas. We should enforce the use of such technologies for government and local government. On education, we should improve the skills of existing workforce to suit the labor market of the future. We should recognize the existing mismatch of qualifications and transform the secondary school education to modern ways of critical thinking and digital skills development. On tourism, we should gradually grow out of high volume and seasonal model. We should encourage health facilities as well as diversify in new sectors like ecotourism and agro-tourism. We should aim to become world leaders in net carbon zero in the next 10 to 15 years. We should give emphasis on higher quality hotels and aim towards business visitors. On the green economy and environmental sustainability, incentives should be given to increase consumption of renewables, whether it's gas or solar. Business should place more emphasis on upgrading standards as well as renovation of buildings, which will support sustainable environment. On innovation and research and development, in order to attain top results and develop an innovation cluster, proper planning and cooperation is required. Innovation is a major development tool and offers tremendous benefits to businesses, consumers, and the economy in general. In order to improve the level of innovation, countries should enforce policies such as investing in education, encouraging cooperation between the academic community and businesses, and generally aim for digital-friendly business environment. The government should attract IT companies through tax incentives, should assist talent development, as well as attracting international talent. And let me finish with also for the government to support startups. We will hear more about startups from the next presentation by Mr. Chris Drouchotis. So it's an easy pass to Mr. Drouchotis. And now I give the floor back to our chairperson.
Thank you, Mr. Kliridis, for this amazing, let's say, effort that you're doing to really modern Cyprus, because it's exactly what is needed these days. What I would say is the timing. I mean, the plan is there, your ideas are amazing. Let's hope that, again, the timing will help us to implement what you have really aspired. So I promised to you before that we'll have international speakers, and we will now move across the Atlantic to New York to meet Mr. Chris Drouchotis, who will talk to us about alternative forms of investing. Mr. Drouchotis' training and expertise is in the area of investment banking, possessing over 30 years of experience by working for numerous corporations on various executive management positions at Bank of America, Merrill Lynch, CIBC Oppenheimer, Mizuho Financial Group, Bank of Tokyo, Mitsubishi Trust. Chris is a former managing director at Sumitomo Mitsui Banking Corporation, managing a loan portfolio of over $10 billion. On April 2018, Chris left SMBC and joined Genesis Ventures Limited as a senior managing partner. At Genesis Ventures, Chris is responsible with the financial analysis and valuation of startups. Chris is also an adjunct professor for the last 16 years, teaching at various colleges and universities, including Columbia University, Fordham University, and Baruch College. In August 2019, Chris has written his second textbook called The Analytical Approach to Finance, Investments and Credit. Previously, SO co-authored a textbook, Mergers and Acquisitions, a practitioner's guide to successful deals, that was just published in March 2019. Chris, the floor is yours.
Thank you, Ms. Danu. Thank you. Hello from New York City. It's morning here, but I feel like I'm in Cyprus. I was there a few weeks ago, so I already missed Cyprus to be there. And I feel the connection now through this, that I'm connected to at least 130 participants, Cypriot friends. Today, actually, I'm going to discuss specifically, buying the story. Of course, Ms. Danu talked about my career in banking, 30 years. And it was full of spreadsheets, analysis, measuring risk. So now I'm more of I left the risk to be more riskier now, buying the story, I call it. But like I always do, is before I do a lecture, and I've been lecturing at Columbia University for years now, I always start either with a personal story or a funny story, like a joke. And all related to what I'm going to discuss. So let's start with a funny story that is very related to today's subject. It was this guy that bought a donkey from Drusha, Paphos, a good old donkey for $500. The day that he was going to deliver the donkey, the guy got a call. He says, look, I'm sorry, but the donkey just died. So do you still want it? I said, well, I pay for it, bring it. I said, what are you going to do with a dead donkey? I said, well, don't worry, I'll figure out the dead donkey. So 3 weeks later, the guy found him on the street. He says, you're the guy that sold him the dead donkey. What did you do with it? Oh, I didn't tell anyone it was dead. I took pictures of the face of the donkey and I put on a raffle ticket, like a lajio, for $2 to win a donkey. And I got $1,000 actually bought the lajio. I said, wow, you made money. Of course I made money. And any complaints? I said, yeah, the winner, and I get his $2 back. So this is a very good segue into this buying to startups. We want to make sure there are going to be a lot of dead donkeys out there, and we need to choose the right story and the right investment. So with further ado, I will continue. So basically, as everybody knows, alternative investments includes nothing that is equity, fixed income, and cash categories. I've been in the bank for 30 years managing private equity investments for the Japanese bank the last 20 years. So it was more like a private equity and also financial or leverage buyouts. In the last 5 years, I've been managing the CLOs, which is a collateral loan obligations. And now in my last 3 years, I moved into Guinness Ventures and I'm doing with venture capital. And venture capital is one of the rising alternative investments out there, especially in the US. Just a little definition of venture capital investing for those young people that dial in. It's a form of private equity that investors provide to startup companies. And we categorize, this is our definition, phase 1, 2, and 3 for a startup, but also venture capitalists invest in late stage business. They have a lot of growth potential. Just to define phase 1, 2, and 3, and I'll tell you what Guinness's venture comes in. Phase 1 is more like a proof of concept, a new idea. It's in a research stage. It's an inventor that came up with an idea. It's going to work. It's going to solve a problem, and it has some kind of proof of concept. Phase 2, of course, that's where KV comes in. It's basically taking the idea and moving to the next level, get third-party verification, maybe an ISO certification, maybe even run some test programs, test pilot programs that it shows consistently that the idea is working, and we're getting a lot of feasibility and fit study from outside that's going to work. And then phase 3, of course, is the ready to commercialize a product, and which basically approaching new customers and trying to get some revenue in, not necessarily make any profit yet, but bring some revenue and start a commercialization product. And as you commercialize, you are pivoting the product to meet the demand of the markets. Now, KV, of course, we get involved not only to provide money through a family fund that we have, but also to give them the direction in the US specifically to accelerate their business in the US if it meets the criteria for scalability of their product. It does not always take monetary, we don't take monetary form, it's more like technical and managerial expertise. KV, of course, we're about 9 professionals in the US. Everyone has an expertise. They're all Cypriots, that's our common denominator. They all came in like me 40 years ago, 38 years ago from Cyprus to study, and we stayed. Actually, my father still calls me if I'm done with school. But we all came here, we had successful businesses, and we all got together to form an alliance to see if we can help Cypriot companies accelerate out of the Cyprus into the US. Now, the US is a very big venture capital platforms. It's about $140 billion per year raise in the venture capital. Even this year actually is going to be surpassing last year, despite the pandemic. And the pandemic, of course, creates more opportunities for the VCs. And I know the panelists in the past, they discussed that, the new world going forward. I'll start with a K-shape. K-shape is basically, everyone talks about U-shape, V-shape recovery, and the pandemic actually created K-shape recovery. K-shape, of course, is like a K. Some businesses will thrive, and some businesses will go down. And when they go down, doesn't mean they're going to stay down. They actually might come back. Some of the K-shaped suggestions are going up. Of course, anything that has to do with technology focus on flexibility to work remotely. That's here to stay, by the way. The flexibility of working abroad. Real estate is very expensive in New York City. I used to work for Sumitomo Mitsui Bank, and it was 5 floors. A lot of people, a lot of leasing. So now a lot of people are actually working from home, and I think that's going to stay going forward. So the technology had to be there to support the conferences and everything else. Customers, of course, online solutions is a must these days. You can't go to a store without having an online solution and succeed. Adapting the infrastructure cloud is getting bigger and bigger now, the cloud, and how do you do cyber security and everything else. There's a lot of investment in that. And of course, blockchain technology, which is the element of trust. We have a lot of mistrust, and blockchain will probably be the next generation. That's the VC focus. Now, the private equity, which I used to manage, we love this recessions, and we love things that actually go value down. So the PE focus now, they are looking at to more longer term focus, the hospitality. I've been valuing hotel businesses for years, and they are very high. The public sector, of course, and the stock market is very high level valuations. Those companies came down, the cruise lines, the restaurants, everything else. So it makes an opportunity for the private equity to step in and pay a little premium, but discount to historical valuations, and then see it through the recovery in the next 4 years and make money as an exit strategy. So the K approach to lower, like the travel entertainment business, it creates an opportunity for many PE firms. But continue with the VC. The VC, of course, is broken up into more established, large investments, like the billion-dollar unicorn investments that we see every day. And there are 2 of them, I guess, this week that are going to an IPO. But to more startups, really early startups. So this has been the biggest. $69 billion was raised, and it's ready to be invested in new startups from phase 2, phase 3, as I defined before. What's interesting, they have $1 billion mega deals. It consists 15%, and that before it didn't need to raise $1 billion for startups because those tend to be small investments. But it's the first time we see a lot of the players, they invest in $1 billion fund, closed-end funds, to invest in startups. Continue with this. What I did, I broke up the startups into concentration of industry, and those industry concentrations, how KV, our company is looking at. Fintech, it's been always a very good source of new startups, especially this year. This year is a lot of investment in fintech and blockchain and cryptocurrency, but mostly applications in fintech. And we see that it's going to continue changing the revolution of banking. My son is 30 years old, and I don't remember he ever went to a bank. He never walked into a branch. And I asked him this, he doesn't even know how a branch looks inside. Everything is done out of online, out of his iPhone. He got a loan for his car. He's getting a mortgage now for his house now. And he's paying and getting received funds from his paychecks and everything. So we're moving into a world of course, digital technology. So the technology is getting invested heavily into that. Actually, there are a bunch of unicorn companies coming into IPO this year. They filed for S1 for fintech. So watch out for the fintech. Clean tech, of course, has always been investment for years on the alternative energy. But even this year, actually, with the new initiatives of ESG that somebody mentioned at the beginning of the panel, and the social and environmental and governance, a lot of technologies are getting there, cybersecurity and social responsibility for investors, but also on the clean tech side of it. So there actually is rising this year. Biotech is huge. This year has been an increase now, about $15 billion new investments in biotech, which basically in genetics and biochemicals and sorts like that. Education tech is probably the biggest increase from a lower base. 1.2 billion children this year were out of school because they couldn't be in school because of COVID. So online solutions, they are not perfect. I teach Columbia University and online I hate it because I'm a guy that walks in and writes on the board 1,000 things, and everybody has to, move with a new norm. But online universities, which is always looked at as it wasn't that good at an online university. Now online is part of our business. All the top schools, they have online classes and everything else. So the education and solution for EdTech is getting much bigger. Other tech includes AI, deep learning, and big data, and of course, of SaaS programs that have solution collaboration. The biggest area I see is collaboration solutions. So somebody has you in a virtual office and you continue dealing 24/7 with your colleagues on solutions like that. I mean, look at Zoom, which I'm going to discuss later. Zoom actually had an IPO pre-COVID around $38. It's $450 today. Okay. These are some of the examples I wanted to put in, this is a brand new series. Now, half of those are fintech stocks, but look at this. This company's actually started maybe 3 years ago with nothing, $1 million investment, and now it's in the billions of dollars of valuation because even though they have zero revenue, by the way, and some revenue, some of them, they are going to their Series F, Series G. Of course, you have Stripe, Chime, and Robinhood. Those are fintech solutions for investing. You got SpaceX. Of course, Elon Musk is going to Mars soon, and the whole thing. But one thing that I'm very surprised that we looked at it originally is Tolldesk. Tolldesk is started, which is one of those remote areas everybody's using. It's like a remote receptionist. So it started with $450,000 investment only 3 years ago. Now they're raising $143 million this year in Series C, ready to do an IPO probably the next year or so, and it's valued around $2 billion. So you can tell it's crazy numbers, but these are what the VCs are looking for and everything else. I will talk specifically for Cyprus in a few minutes, but this is what's going on in the US, sorry. Now, when you look at the VC platforms in the US, and anyone can invest from Cyprus in those platforms if you have the qualifications, and that I can discuss more. You have the PVC late stage. These are the pre-IPO stage VCs. Institutional investing probably is the biggest thing. It's an LP-GP structure, like a private equity. And institutional investors and foreign investors, international investors can invest through an LP structure in the US. You have the VC early stage that catches a little bit the high net worth individuals. the accredited investors, which is defined in the US as $200,000 income or $1 million of net worth. They have a lot of platforms here. We actually at KB, we're dealing with some of those platforms, collaborating with some of them to see if we can bring our companies. You have the VC angel and seed. This is early stage and seed money. We have, Base Camp with a $25,000 minimum. You can actually get into their VC if you have the qualifications for accredited, and they allow some non-credited investors, up to 30 investors in those funds. Those are closed-end funds, of course. And then the biggest surprise and the biggest focus now is called the crowdfunding. Crowdfunding is the retail investor. Anyone with $10 can actually participate in any VC new startups. There's a lot of them, like WeFunder, which is 30% of the market. They're raising money. They raised about $100 million recently from little guys like us. And basically, the companies that they are promoting, they are more Regulation D, private placement, and now they have this CF. Now, recently, of course, with Obama back in 2013, he came up with the Jobs Act. The Jobs doesn't mean jobs, but it means jumpstart our business startups in April. And then in Trump administration, 2016, they expanded that in Title III into crowdfunding. So basically, funds can raise money from retailers into funding. And just recently, in November, the $1 million raising money in the US through crowdfunding is going to be $5 million soon. It's going to pass through, I guess, the Congress soon. And you can see about $5 million of new investment or new approach from banks. So this is already a big area, the crowdfunding, and it gives an opportunity for companies like new startups in Cyprus that we are following to start in the crowdfunding. We're looking very closely into that because those you can raise $50,000 to $100,000 investments for those companies, which before it was tough to do. You got to do it private to find a VC to do it. And this will actually put a competition to the VC world because now that they raised the $5 million, most initial investments they only really need more than $1 million to $5 million before they move to the next series, right? So just to finish off the next two slides, here at KV, we actually, when we look at some Cyprus companies, we looked at some brand new Cyprus companies. We'll probably screen about 40 Cyprus companies to see if he's ready for the US to accelerate. We identified about 6 already. We invested in half of those, and we are providing for all of them services. Basically, to become more successful, have a successful new venture for investing in new businesses, you have to build a well-balanced, diversified investment. Now, from a high level, anyone's investing in equities, fixed income, and the traditional and real estate as an alternative, having 5-10% in VC actually, it's most recommended in general, but no more than that. It's a very risky business, as you know. Identifying the winners is a very difficult task. So we continue doing that. We concentrate first on business domain that we know. As I mentioned, we have 9 individuals looking very closely. So concentrate on what we know is better. We fund the team, the entrepreneur, the vision, and it's very important to have a team that we can fund behind it. We partner up with existing investor to see what the next level of funding, and we talked to a few of them. If it's small enough, we're looking at the crowdfunding I mentioned before, the $50,000 type investment. And then we participate as advisors, which is important for us to participate as advisors to see through our investment. It gets into the business plan that we discussed. We have an extensive due diligence, of course, before investing. It's telling the story, buying the story the story has to convert to dollars and returns. And we're investing in local, specifically in this case. We chose Cyprus, our kitchen test, I call it, to go in and look at it and move on to the next level. And always have to be patient. You have to think long-term, and patient capital is important. You have to see through all these phases into commercialization before you see anything coming down. Now, on my last slide here, now, according to Bill Gross is a different Bill Gross that was mentioned before. This is more a big growth of a startup. He started the Idea Lab in 1996. And Idea Lab, he's one of our kind of founders of ideas and looking new products, new companies. He invested about 200 companies. Now that 45 of them are unicorns in the IPO market. But anyway, he came up with, we did a little study, this guy, Bill Gross, and he says, well, there are 5 factors why startups succeed. Idea, good idea, management team, of course, a business model that works, funding and timing, okay? And just for fun, I'm gonna launch a polling, and you can tell me which one you think is the most important factor in a successful startup. So I'm launching it now, and I'm waiting for you guys. So choose any of those. Okay, about 53 voted, so I'm getting there. Another 5 seconds, maybe. Okay, this is the results. Most of you put team, 42%. The next one is probably timing, and a few idea and business model. Now, let me give you what what Mr. Bill Gross did and his results, which is a little different, slightly different. The number one factor is timing. Factors about 40% chance of success, because when we talk about business success, we talk about 10 to 50% chance of success execution. To increase that to 40% chance of success, timing. Timing is important. You might have a great idea at the wrong time. Team is very important, came second, and I think you guys did a reverse of that, which is fine. But timing is very important. Look at Uber. Uber was created because of the job search. People going through a recession, 2008, 9, 10. People want to have a second job, so they have their cars taking people around. Airbnb, which it's another area of people actually get additional income. Airbnb is going IPO on Thursday. We'll see what happens with the pricing. So this is my presentation. Thanks for listening. And I guess the next thing will be a few questions. Appreciate it.
Mr. Drysotis, thank you ever so much for this amazing presentation. You know, I love the American model in all aspects. Apart from Mr. Trump, the rest, I think it's fantastic, and your pace also. We'll start with a question first to Mr. Clearidis, which says, is there a risk that the strategy study ends up in the filing cabinets of the civil service, as has happened with other independent studies of similar nature?
Thank you, Madam Chairperson. Well, there is always a risk, but let's consider some other aspects of it. Is that Cyprus is a member of the EU. This study has the financial support of the European Union, and no government is committed to adopt 100% of what is going to be proposed in this study. It's a comprehensive tool that any government in the next 10 to 15 years may pick and choose the majority of what is being proposed, because this is the wisdom not only of the Council of Economy and Competitiveness, but the wisdom of consultants that go beyond the boundaries of Cyprus. I would say that in the past there was no political will to adopt similar studies. But the fact that the previous studies have not been, or some of them have not been adopted or implemented, is not a reason not to proceed with the present study that will include the views, and this is the intention, of all the players that have a role to say for the Cyprus economy.
Thank you. Let's hope that it will be done. And as mentioned before, timing again is of essence. Okay, the next question is for Mr. Drysotis, and it says, how will an international investor access the US VC market?
Thank you for the question. Of course, international investor is like anything, like buying a stock in the US. Somebody mentioned Tesla. If you buy Tesla, you can buy Tesla through your broker. But VC investing, it depends where you are. You can actually access the VC market through crowdfunding. Now, there is some requirements that the foreign investor, like anything, with the Jobs Act, we have the Title III, which is basically it's an investment, I guess, which this is the U.S. vehicle for foreign companies. But you can access the VC market if you're an institutional investor. Of course, you can be one of the LP investments. There's been a lot of increase of foreign investors in the U.S. and has been changed. The rules have changed to have a little more flexibility for foreign investors in the business. Of course, it's a non-controlling investment. You cannot control the investment, but anyone from the retailer, from a guy around the corner, can access the VC market through crowdfunding, all the way to a more accredited investor, to a high net worth, and also an institutional investor. The key variable here is you can't have a control over the investment. And it's a passive, like anything buying a stock in the US.
Okay, that was a two-scale question. And it's also asking the delegate, how will Cyprus startup company access US VC capital?
Yeah, well, there is a little bit more involved. One of the companies that were ready to bring in the US, they have to, sometimes, Israel, for example, they always have startup companies very successful in the US. It is the laboratory for the US, Israel, for new startups. So a lot of the startups starting the investment in Israel from US companies. And then if they move to the US to accelerate, they have to set up a US office, a US subsidiary. I mentioned before under Title III, you can actually access capital. It is a Regulation D, which means that you don't have to, you have to register as an SEC. You register the SEC by saying that I'm doing a Regulation D, which is a very flexible numbers that you need, KYC, who do you know, and everyone else. But any company in Cyprus can actually come into the US, set up subsidiary, and KV helps them do that. And from there, they can access capital, either VC directly, or if we go through the crowdfunding approach. But the key here is to set up an office in the US.
Thank you. Thanks a lot. One more question is coming from Mr. Kliridis. How you can seem optimistic that Cyprus can achieve what you have described in the long-term strategy for the Cyprus economy. On what grounds do you base this optimism?
You're mute, Takis, you're mute. Yeah.
Sorry, I have unmuted myself. First of all, let me clarify that I am a born optimist. Based on the ego, on the perseverance, the hard work, and the forward-looking attitude of the Cypriot business people, we have achieved a lot in the last 50 years. I believe it was not by accident. We had planned wisely, and we had exploited the advantages and the opportunities that came our way. We can continue to do so by following examples or adopting ideas of other countries who could be the best in class on certain items. We do not have to copy all these countries. I believe we can take elements of that success and adopt them, or some of them, for our country. We do not want to be Singapore, we don't want to be Dubai, Hong Kong, Ireland, or Israel. But I'm sure you agree with me that there are elements in those countries that we can take and use in our economy and transpose them to our business environment. At the same time, I know, and we all know, that other countries are copying things that we have adopted in Cyprus as the first people to do it. So this is the name of the game. Don't copy, just take elements, bring them into your own environment, and then I believe that we can achieve that.
Thank you. Thanks. Some time ago, we aspired to be in the past Singapore, and probably we could. The size really helps. Therefore, it's just the effort that we should all put together and be able to succeed. I think that's very important. Some more questions are coming. The next one to Mr. Drouchadis. What do you think is the most valuable weapon, competitive advantage of Cypriot entrepreneur startups in the world business arena?
Very good. You know, when we started this KV 3 years ago, and it was almost like it's more like a romanticism to come back to Cyprus. And it's basically 9 of us successful individuals. And look, let's look into Cyprus. We got very impressed with the talent and the education of Cypriot and inventors through the University of Nicosia, University of Cyprus. So a lot of the idea that Bank of Cyprus put together, which is like a form of introducing a lot of the young entrepreneurs. And I was very impressed, and I've seen many entrepreneurs in the US and other countries, and I was very impressed about the passion, the ideas and everything else. So we devoted ourselves in helping those individuals in Cyprus. So I think the number one, as you know, I grew up in Cyprus, of course. It says, you know, when you're 18 years old, you go after the army, you have to go out and study. I mean, if you don't study, then it looks like it's a form of failure. Anything, just get a job outside the Cyprus, get a university. And that approach, which many countries have, like China and everything, it's all about education. So the education level that we have promoted as one of our culture created a lot of young individuals with a lot of zeal to do better. So I see that. And as I mentioned, number 2 success story is the team, and the team behind it is more important. So Cyprus has that. And now with the universities and very high educated professors coming from abroad to teach, it's even exacerbating the level of, more expertise coming into the year. So it's a great opportunity for KV to meet those individuals and promote them.
Great, thank you. There is one more question for you, Mr. Drouchadis. How a local startup can reach out to KV, and are you generally interested at phase 1 and 2 of a startup?
Yes, we screen a lot of the bank. I know we've been there. One of my founders, Andreas Panagi, which started the business, he spent half his time in Cyprus, and he's a successful individual himself, started businesses and sold them and exit. So he's the one that goes in and screens all this. He sits down and listens to their stories. So if you want to reach out to KV, of course, we have KV, Kinesis Ventures KV, and their website. You can find me on LinkedIn, and you can send an inquiry. But we're working with a lot of local, through IDEA of Bank of Cyprus, and a few other investment vehicles. So please reach out to us, and we'll be like you talk to phase 1, of course, and phase 2. We're always interested in looking and see if there's a story there that we can is scalable enough so we can bring into outside of the Cyprus borders. Yeah.
And also, dear Mr. Drouchadis, if I can take the liberty, they could reach out to me, and then I can get you connected with KV, because probably I could say here publicly a big thank you to KV and Mr. Drouchadis and Mr. Panagi that they have invested in my son's startup up in Los Angeles. So I think the example is practical and very, very successful. And a big thank you. We'll move to another question, and this is for Mr. Kleridis. Why the commercial banks are becoming more and more difficult instead of encouraging SMEs to help recovery?
Well, the question is absolutely correct. Unfortunately, the banks could have done much better to help new guys to start up their business, but also existing business. After the events of 2013, I think the banks have been holding back of what they should be doing, in my opinion. I think it's a matter of time how they will change their attitude when the banking system and the banking regulations imposed by ECB would be much better and more banking friendly for them as well, so that they will be business friendly themselves. We are going through a period now which things are more difficult, but I am sure things will improve.
And as I say, probably if we all could be human in all aspects, things would be better.
Yeah.
Okay, because we reached really to the closing time. Let me at this time, dear speakers, thank you for your most valuable contributions, insightful perspectives and advice. You are absolutely great. Would also like to thank our dear participants. Your presence and input in this dialogue has been significant. We look forward in having you back next year, physically, hopefully. We shall aim to include more women in the team of stage, as their complementary perspective will do of no less value. I got this remark many times where why not more women were not in this panel discussion. So next year, we will aim to have more on this stage. Thank you again all. It was wonderful to hear all these views and have a lovely festive season to come. Thank you again.